on market headlines. To understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
A red start is what Hang Seng has seen. Taiwan index is down 2% as well.
The US has signaled a willingness to renew cooperation with China.
Expect growth from HCL Tech this time. Dollar revenue growth seen up 1.8%.
GIFT Nifty is, I think, indicating about a 100-odd point lower start. 25,190 is where the Nifty is at. 25,200.
Between gold and silver, I think our relative preference for silver has been higher in recent times.
51.5 is an all-time high that silver prices are at.
100-point downtick there, and we have all the sectoral indices in the red.
This was, a procedural issue. There were some consumer complaints or something.
Supreme Court, while deferring the case, said that it wants the government to take a specific stand on this issue.
Slightly muted start to this particular week.
Well, that is the day so far, and I have to say that as we start this last hour on closing bell, markets looking much better. We are down about 34 points, 25,250 is where we are at. And there's a sharp sort of bounce which is playing out off the low point of the day. Actually, the bounce started about 220 or so is when the bounce started. We were at about 25,200, and we've added 50 points basically in the last 10 minutes or so flat. There you go. That's what I'm talking about. So, not a bad screen at all. The Nifty Bank, of course, is off the lows significantly. It's up in the green, about 0.25%. And many sectors, many pockets in the market showing that as well. Market breadth may give us a clean indication of where things are at. So not very much by way of improvement, maybe a little bit. It's still about 2:1, declines to advances. So more down than up is the screen as far as the broader market and everything on the NSE is concerned. This is Closing Bell. We're coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleague Reema. Reema, hi. Afternoon.
Hi, afternoon. And Europe has opened higher, so up close to about 0.5% on the benchmark European indices, the CAC, DAX and the FTSE. And the Dow futures too is signaling a rebound. So after losing about 880 points in Friday's trading session, the last I checked, the Dow futures is up 450 points. So it looks to reclaim at least half of the previous session losses. It's a broad-based recovery, fairly, but it's banks leading on the way up. Capital market plays are higher. And in individual stocks, even HCL Tech deserves mention. The stock is spiking and now back in the green and recovered close to about 1.5% from the day's low ahead of numbers which come out later today. But all in all, this is actually not looking so bad. After a weak start, markets have staged a recovery. We were down nearly 0.5%. Around the 25,150 was the intraday low on the Nifty. So now 100 points up from that low. The sensex 2 has trimmed most of its losses and just down close to about 0.1%.
Okay, well, let me just quickly run you through what's lined up here, right, in terms of the programming. So markets, of course, in a tight range off the lows, as we pointed out. And I mean, the major indices are all there, about 0.25% on the Nifty Bank. The mid-cap index is flat, but 58,722. And the small-cap index is also going to come up in a bit from now. Now, looks like with regards to the uncertainty over US-China, maybe it's been taken down a peg or two, because over the weekend, of course, it was looking full-blown. But this morning, with that President Trump's social media post, I think people are essentially hoping that it won't come to that additional 100% tariffs by the 1st of November. Silver ETFs continue to run hard. I mean, and we'll have more on this one, but 4, 5, 6% actually in many of these. So absolutely unstoppable move here. Dream Folks is another one. Stocks bounced from 100 rupees, which was the recent low, to about 140 very, very quickly. And we'll tell you what's happening. Is anything changing in the margin? Completely bombed out, beaten down name. There is the other one, which is, of course, BLS International, which is seeing a sharp slump. There's news there. That's another one which we will focus on in just a bit. It's down 11% off the lows there as well. How should you position yourself in the last hour? That's the question. Mitesh is here from Bonanza Portfolio to run us through exactly that. Mitesh, good afternoon. So not looking as bad as it was in the morning. In the morning also, it was not looking all that bad with a 100-point cut. But what's the trade here, Mitesh?
Prashant, so, in the morning also when we had this indication of a gap down of about 60, 70, 80 points, my idea was that this should be only a pullback and not any kind of a corrective move. We didn't even break the 10-period average on the 2-hour, 3-hour chart. So we just kind of touched them and bounced back from there. The sense is that the structure is very positive. The indicators on daily, weekly charts are slightly rising. The averages are doing that as well. The only issue is that if you join the high of around 25,630, the closing which we got on 27th of June, to the recent high of 25,420, that was the closing we got on 18th of September. The trend line comes around 25,350, 400 zones, depending upon what slope you are drawing it at. So till we clear that, I think you will get this bouts of some profit booking selling at higher levels. But looking at the way the indicators are shaping up, good chance, and there's a stronger chance of us having a breakout on the upside. So my sense is that use declines to buy, and on the stock side as well, trade with long bias. I have 2 buy calls right now. The first one is a buy on LoRa developers. It's a conditional buy. So I want to see the stock price getting past levels of around 1160. By then with a stop at 1145 for targets of 1190. And the other one is PGEL, PG Retrocast. I think that's the stock. That's a buy with a stop at about 575 for targets of 6.8, 6.10.
Okay, thank you very much for that, Mitesh. We'll touch base soon enough. Let's talk about stocks then. CE Infosystems is on the rise. The stock has gained close to about 6-7%. Vinny is now joining in. Vinny, the Ashwini Vaishnav's comments have literally lit a fire under CE Info. I mean, what exactly did he say? How is the street reading it? What does it mean for a company like MapMy India?
Absolutely. So, what is in terms of commentary? This came in yesterday, and what they spoke about and what he tweeted, put on X as well, was that he said that Swadeshi maples by MapMy India is a good feature and it's a must-try feature. And in this, there's a video of him also using the app. Now, post this, today there's a notification that came in from the company that the Ministry of Railway will collaborate with MapMy India through an MOU. This will be mainly to bring MapMy India maps as well as Maples technology into the railway application side as well, helping them, travelers in terms of planning, navigating, as well as commuting in terms of information as well. Apart from that, we had Zoho's founder, Sridhar Vembu, who also posted on X, and he said that the Maples app is very nice. It reflects a decade of research and development, focusing on the Swadeshi movement, focusing on Atmanirbhar Bharat. And in a response to a user on X, we had the director, Rohan Verma, who actually responded to them saying that, they would be more than happy to actually integrate their service with Aratai app as well. So that is also something that is leading to the run-up, given that the app, Aratai app itself, has seen such a good run-up in the last couple of days. So that is going to be interesting to watch out for. But today, a lot happening on the railway side as well, and that is what is keeping the stock in focus.
Thank you very much for that. In fact, in an exclusive conversation with Zoho Corp's Sridhar Vembu, Shireen, my colleague, spoke to him about the breakout moment in India, the self-reliance on and being Atmanirbhar in Indian technology. Listen in to those comments.
You talked about wanting to make in India because you believe that technology is often weaponized, can be weaponized, is being weaponized. But, 2025, you're having if I can call it that, a breakout moment in India. You've got government ministers tweeting, saying that they're moving to Zoho, urging and nudging other citizens to move to Zoho as well. But, does it surprise you that Zoho Mail, for instance, turned 15 in 2023. Zoho Office Suite, the upgraded version, was launched in 2018. Zoho Workplace was launched in 2017. And yet, we're now in 2025 when you're finally having this breakout moment in India. How do you explain that?
Yeah. So, first of all, the technology had to have been built in order for it to be adopted. And if you look at Zoho Mail, nearly 2 years ago, the government, the NIC, selected Zoho after a very long, arduous process of evaluation, a lot of audits, over 18 audits performed, and it was selected, and it is now already serving a fairly large number of users within the government. I believe about 1.5 million now, and growing. So this happened well before this current episode. Now, how did we arrive at this moment? It's basically, I call it the Swadeshi awakening we are going through. And I've been part of the whole Swadeshi movement, Swadeshi technology movement for a while now. In fact, I am very proud to be associated with the Swadeshi Jagran Manch and Sri Sundaramji from Madurai. And I've actually had long conversations about the need for technology self-reliance in India. And that now message, I'm very happy to see this awakening happening. This is not only government. I want to emphasize this Swadeshi movement is happening across our private businesses, our educational institutions, our common citizens, right? Everywhere I see this. And the reason it's for that is, of course, the global landscape, which has changed fairly dramatically. And to be honest, some of us expected this global landscape shift because, I always felt the global trading system itself was built on a very, unsound foundation. And that was prone to collapse, and it's creating these conflicts. And those conflicts, once they emerged, we can see that on why we need the Swadeshi movement now. So I'm very happy to see the awakening happening right now.
Okay, this Swadeshi awakening, it's time for that. Dipan Mehta, Director, Elixir Equities, is now joining in. Dipan, globally, tech companies are in a super cycle. But back home, here in India, on Dalal Street, other than the consumer companies, the consumer platform companies, the so-called tech or ally plays haven't done too well or not done much, whether it's even MapMyIndia, which saw its growth slow down last year. I mean, I think I can think of NetWeb, which has done pretty well. But outside of that, we haven't seen too many, big flourishing stocks. Anything that you like, which can come in this Swadeshi, tech play?
Yeah, Rima, good afternoon, and thank you for having me on your show. I think that has been one of the criticism against the software industry, and to an extent, even the pharma industry, that, we are basically, in the pharma, we are providing copycat drugs, and in the software industry, we are just focusing on providing services. And in the large US software companies, the product companies, they take our services and they are building world-class products and creating kind of monopolies which are very, very difficult to break. I mean, a lot of the development work, be it in Google Maps or even in Microsoft, in terms of their Office suite, all of that coding has been done by Indians or software companies providing services to Microsoft. So that's one of the issues. It's changing slowly, but still a long way off because it's a mindset issue. Coming specifically, I think within the tech sector, yes, you said that NetWeb certainly, is a company, a homegrown company which has done well. There are few and far in between. Even the product companies in India have not really, put the markets on fire. Like Nucleus Software was a financial product company, but its performance has been pretty disappointing. I didn't think it is, operating at its full potential. And there are a few companies like that, but by and large, I think Indian software industry is going through a very, very difficult period, according to me. And the slowdown is real and it's structural. So we are finding it very challenging to find stocks. There could be a few outliers, like, Persistent Systems or Coforge, which have got some specific vertical or very aggressive marketing. But by and large, I think one needs to exit the software sector.
So, Dipan, to that criticism, TCS has, announced a data center play. They're looking at adjacencies in the AI ecosystem. Is that good enough, at least as a start?
Rima, has going to be a drop in the ocean for TCS. TCS is so big; it's among the top 5 software services companies. And such ventures are a bit late in the day, but nonetheless welcome. And also another issue with the larger software companies is that they are not focused on consulting business, like the likes of Accenture, and not done enough acquisitions and, not worked on a lot of the other aspects. So by and large, we are out of all these software companies, be it TCS, HCL Tech, Tech Mahindra, all of these companies, and trying to find niche plays within the software industry, which are very difficult. But I'll tell you one thing, Rima, if you just give me a minute to extend, that this rupee depreciation, especially against the euro and the pound, that may benefit a few select companies. And one company which comes to mind is Mastech, which performance last few quarters have been exceptionally good. And they are focused on the UK market. And if you see the currency which fluctuation has taken place, the depreciation of the rupee versus the pound has been phenomenal in the last 3-4 months or so. So I expect this company to report very good numbers this quarter, next quarter as well. So like that, you will get trading plays. But on the whole, I think there are very big structural problems within the industry.
Yeah, no, absolutely. Markets are, of course, at about 22 to 40 or so. Dipan, another area, right? If another stock actually, or maybe a sector is textiles, right? Heavily sold into because this US-India, the trade tariffs rates, etc., went south. It was supposed to be in an advantageous situation. There is one view emerging amongst many investors that maybe things are on the mend, on the repair. So perhaps, maybe it's tactical, maybe, there are believers in the long run story here in textiles as well. But one way or the other, perhaps, if this gets resolved, this is one area where you perhaps have some upside. Would you agree with that assessment?
Yeah, I'm sure, Prashant, that if the tariff levels are at reasonable levels, at comparative levels as compared to some of the other exporters like from Vietnam or Bangladesh, then I think companies like Kitex Garment is there, Gokuldas Exports is there, PDS is there. Certainly they can benefit. Although PDS is a global manufacturing, they are more like, design house. So to an extent, they are hedged that way. And then there are the home furnishing companies, Wellspun and Indocount. I think they also will benefit. But let's just wait and see what the tariffs come out. Few months ago, we thought that, we were going to get the most favored nation tariffs, and look what happened, So I wouldn't want to trade these companies in advance. Let us understand what the tariffs are actually, at what levels, and how they compare with some other competing countries, and then perhaps take a call. Right now, there's so much of action happening in the domestic-oriented companies that you can easily ignore the export-oriented companies and still build a very decent portfolio, which can outperform the markets.
Okay, all right. Dipan, stay with us. Well, let's get in Manisha Gupta. She's here to tell us about the big moves you're seeing on silver and silver ETFs. Manisha?
Well, thank you for that, Nigel. Well, yes, even today, as we are talking right now, silver in the international markets is trading at an all-time high. So is the case in the Indian markets as well. And just before I backed up for the link, I was talking to a lot of bullion guys, silver wholesalers, manufacturers, etc. And they tell me that even now, today, with these all-time high prices and prices having gained 60% in 6 months and 78% in this year until now, there is very strong physical demand into the markets right now. There's a premium that's ranging anywhere between 8 to 10%. People are ready to pay 20 to 25,000 rupees over and above the actual silver price as a premium to get it. So that's exactly what we are looking at. When we talk about silver ETFs, then, well, yes, they seem to be surging even higher. So if we are looking at 4 to 5% of an increase in the silver prices, you have seen 6 to 7% of a gain come in for the silver ETFs. But then remember, when you look at the overall silver investment market for India, almost 95% of that is still physical. And when you look at silver ETFs and digital silver buying as well, and that seems to be doing quite well as well, is anywhere between 4 to 5%. And when there is such a huge premium happening in the physical markets, you will see that converting into silver ETFs as well. And that's exactly what we have seen. I also spoke to some silver ETF funds managers as well, and they say that the volume in last couple of years is actually, couple of days actually, has gone slightly down because of, one, the silver prices running up, and two, because of these silver premiums as well. But from where we are standing right now, if you look at the international markets, that's exactly what is happening. If you look at London, well, the liquidity there is quite short. Banks wanting to buy silver, for them, the borrowing costs have gone much higher. And because of the US government shutdown yet again, the custom clearance is not happening there as well. So there is those arbitrage opportunities that you are looking at in New York versus London. And all of that seems to be spilling over into India as well. Most people thought that perhaps Indians won't buy silver because it's trading at an all-time highs. What with this 60, 70% of gain in prices? But that clearly is not the case. There are buyers, there are physical investors as well. And silver imports have been slightly lower. For this year, perhaps you could be looking at 5,500, 6,000 tons of silver yet again coming into the Indian markets, even at these current prices.
Okay, all right. Thanks a lot for that, Manisha. Well, Dipan, coming across to you. If you want to play silver wire stocks, there are only two, right? One is Hindustan Zinc. The other one is Vedanta. What do you think?
I think, good afternoon. Nigel, we're to go with Hindustan Zinc only. I think they're increasing their capacity also. And buy the holding company when you can get the subsidiary and have a perfect play on silver over there. But, these things are well discovered and to an extent even priced in. And investors do not feel that such rallies in silver are really sustainable. So, of course, it'll have a bump up one time in its profits because of silver. But whether it's sustainable, that's a big question mark. So we can't really pay a higher P multiple just because there is a cyclical upswing in silver prices.
Okay, all right. Deepan, I wanted to ask you about Orient Pro. We had Dharmesh Kant who joined us earlier this morning from Chola. And he was talking about the profitability going up from 180, 190 crores to around 300 crores by FY27. You had briefly spoken about the stock in the past as well. It's up close to around 10% as we speak, but it's been a rank underperformer in the last 1 year. You had earlier mentioned that you would look to buy it on the dip. Have you done any more work on it?
No, actually, Nigel, the last quarter numbers were a bit disappointing and client wins didn't work out the way we expected, but it's under watch. And as I said, that we're looking for good ideas within the software space. So there is, of course, Orient Pro, which comes to mind. And then there's NetWeb also, which Rima spoke about. There is New Gen Technologies, which is looking quite interesting. Then there are certain homegrown platform companies like Blackbuck, which is, doing that Inca Logistics. That's an interesting company to track. And then there is another company called Black Box, which provides network services to global Fortune 500 companies, the Ruya Group company. They're doing something interesting and quite different in the US market itself, and a big beneficiary, I think, from the data center business also. So like that, you have to look for businesses which are different concept stocks, differentiated business models. They're difficult to find and they're expensive also. But I think you may get a better return over there than some of the traditional software services companies.
No, absolutely. Blackbuck has done very well. I mean, actually, the 3 days back price was $600, 710 now. So bulk of course, its business is now Fastag. But of course, they've got a platform that's supposed to be the big one where they're trying to organize trucking as a business. But for now, it's of course Fastag and Blackbuck, which Deepan pointed out, of course. Ruya Group company providing data center services in the US. It's not focused here in India, but in the US. So, yeah, I mean, lots happening, lots of interesting names out there as well. What we're going to do is take a quick commercial break. Deepan, thank you very much for coming on. Appreciate your time here as always. And we'll come back with Ronak Onkar of Parag Parikh Mutual Fund on the other side, and we'll take some of this conversation forward with him. Stay with us.
Welcome back. You're seeing quite the recovery in some individual mid-cap names. So Utkarsh Small Finance Bank, let's get that up for you on your screen. Ola Electric back in the green. BSE is spiking up. Jubilant in Griva, 8% higher on that. So, the mid-cap index is in the green, flat, but individual stocks are up. Let's go across now to Hormus as he puts the spotlight on some of the top movers.
Jubilant Ingrevia was trying to put that in the spotlight today, but then the volumes were not as significant as some of the other names on the list today. Look at Dreamforce Services and a stock that has been battered, bruised and whatnot. The stock is up 40% or more in the last 7 sessions. It's the biggest single-day gain that the stock has seen since listing. And this 17% move is preceding 4 straight upper circuits of 5% in the last 4 trading sessions. Now the stock has gained in 6 out of the last 7 sessions. Of course, we have had close to 30 lakh shares that have been traded today on Dreamforce compared to a 20-day average of 1.5 lakh. And this is, of course, a change in price band as well for the company. And despite this 45% move that the stock has seen in the last 7 sessions, it is still down more than 70% from its recent 52-week high, and you keep that in mind as well. Now, I had Jubilant Ingravia on the list after all. The second straight day of gains for the stock, the biggest single day gain in 4 months now, 8.5% higher here. We have had 62 lakh shares that have changed hands compared to a 20-day average of 1.5 lakh, and the stock has now moved above its 50-day moving average of 700 and the 100-day moving average at 703. The next important level, the 200-day moving average, which is at 711. But still been an underperformer, has Jubilant Ingravia, still down 15% this year. News flow driven name, BLS International, stock at one point in pre-open was down 17%. So there is some marginal recovery from the lows. The intraday fall is the biggest since 2020. And the volumes today are already the highest since the start of the year. We have had close to 2.5 crore shares that have been traded compared to a 20-day average of just around 11 lakh shares. The stock was already below its key moving averages, and this fall has taken it further below all of those important levels for BLS International. It's been an underperformer this year, down over 40% before today's fall. And lastly, a news flow driven name again, KFin Technologies, a third straight day of gains for the stock, 6.5% higher, and a positive reaction to a brokerage upgrade coming in. The stock in those last 3 sessions is up 10.5%, and we have had close to 51 lakh shares that have been traded today, 20-day average of just around 7 lakh shares, and the stock has moved above another important level, which is the 200-day moving average of 1134.
All right, thanks very much for that, Hormuz. Appreciate it. We have Ronak Onkar of PPFA's mutual fund now with us. Ronak, good to have you with us here. You're one of the few, I guess, who has a view on, actually, maybe other people also have a view, but you've got positions in a lot of the FANG stocks, AI-related stocks, right, which have all done so well in the US. This unending debate about whether, too much money is being spent and whether this is all going to sort of, amount to what? Is there mistakes in capital allocation which are going to be made? And, especially now after everybody sort of, committing investments in each other. So it's like one big, nice round circle. What do you make of it, Ronak?
Thank you for inviting, Prashant. I agree, there can be two aspects to looking at it. One is that the build-out is needed to be happening because people are building applications on top of these AI models and people are scaling their use cases across different industries, across different user base. So that is seen. The scale at which these apps have been used today is completely unprecedented. If you see, it is just 3 years back when ChatGPT, the app, was launched. That is number one. On the other hand, one can look at it from a financial engineering point of view, whether it is supposed to happen in terms of vendor financing, whether people can scale their balance sheets at such a rapid pace in terms of capex and in terms of capital deployment and lending to their own customers. So you have to balance that view over a period of time and see where the growth actually is going to come from. And the focus, I think, for most people should be on the actual application of the technology and not just having a say that, okay, I applied AI, but it is just for the namesake and not actually useful in the overall scheme of things. So it's a mixed view in my view. But in the end, you have to be conscious about the valuations you're paying for some of these companies.
Okay, all right.
I think your overseas tech investments is about 11.5% of the overall fund size.
Yes, so we have 4 companies in our global portfolio in the FlexiCap fund.
Yeah.
One is Microsoft, the Alphabet, which is the parent company of Google, Meta Platforms, the parent company of Facebook, Instagram, and we have Amazon, these 4 companies.
So how is this 11.5%? How has it changed in the last 3 months? And what is your view going ahead? Are you looking to bring down or increase your holding given what's happening?
I wouldn't want to give a forward-looking view as to what we will do, but it has been overall in the same range in terms of percentage over the past few months. In fact, if you see from 2022 onwards, that number has declined quite dramatically on account of the FlexiCap fund not being able to invest globally from the fresh inflows that we get. So this is the residual amount that we have already invested and some dividends which were reinvested in some of those stocks.
All right. Hi, Ronak. Good afternoon. Good to see you, Ben. Ronak, what about the cash? It continues to remain in mid-20s. You believe better opportunities will come?
We'll see when opportunities will come, but at the moment we are not finding too many attractive opportunities. So within the portfolio, wherever we have an understanding of the business model or the cycle, we are deploying cautiously within those stocks. But broadly, if you see, we have not added too many new things in the portfolio.
One contra call that you'll have gone for big time is IEX. And people are debating weekly expiry. There's going to be some regulation or not. There's a listed and unlisted play. You have gone into the one that's actually come off the top, but there is still not too much clarity out there. Tell us about that call on IEX, because if I look at your last month's sheet as well, you'll have adding on to that position, building a bigger one.
Yes, so IEX has been facing a lot of adverse news flow, if you see, in the past 18 months to 2-year point of view, from the consultation paper coming in and even the dynamics of the market changing. But not much has happened on the ground. That is one aspect of looking at it. The other is when you have an established network effect of a incumbent player who is actually dominant and who actually has the user interface to cater to the demand for shorter term power trading, it is important to understand what is the new proposition that is coming in. So, of course, regulatory changes can affect the business model. We are conscious of that, and hence the position has not scaled dramatically. So, we have a little bit added to what the existing position was. But on the other hand, we have to see whether the existing competitive advantage remains or not. That is still unclear, like you said, and even the implementation of the overall market coupling, we have to see how it executes over a period of time. We will take it as the news flow comes in and as the business performance is reported by the company. But so far, there was no need for concern because the existing business model has a very, very strong roots in terms of how they operate.
Okay. Ron, a quick question. As a house, what is the view on gold and silver?
So none of our schemes have any commodity exposure, so we don't have a specific view. So our general view has been that these commodities are part of investment portfolios of many people. So asset allocation rules should be followed. You cannot have one asset becoming disproportionate part of your overall portfolio. So as long as people are comfortable with the asset allocation in these commodities, it should be okay.
Okay, great chatting with you. Short one today, but look forward to the next one. Thank you for joining in. Get into a break. On the other side, we'll get you a check on what dealing rooms is saying in our segment D Street Chatter. We'll also get you a few BTST calls. Stay tuned.
Welcome back. You're tuned in to Closing Bell, and you're coming to you live from CNBC-TV18 Motilal Oswal Newsroom. Well, we have Mitesh Thakkar, who's back with us from Bonanza Portfolio. Hi, Mitesh. The markets tried to pull back. It appeared like we were going to be trying to break into the green, but that's got sold into a little bit. How do you read market action today? If you had bought a contra buy, will you be squaring that, or will you carry the long and fresh trades as well?
Well, if you want to buy now, which is basically if you got in at the intraday or the opening point of the day, I think don't carry forward. The reason being we are sitting at a resistance level, which is what I explained the trend line around this 25,350 mark. So don't carry over. A good positional bet will be if you get the markets closer to about 25,100. That's your positional entry point, and then you can even look at 25,350 or maybe possibly eventually a break beyond that. But if somebody's bought just today with the gap down, I think time to take profits. And on the stock side, Inox Wind is something which is coming on my radar. Inox Wind is a BTST with a stop at about 148 for targets of around 152.5, 153, and Gas Authority is the other one. Again, that's a BTST with a stop at about 179 for a target of 183.
Okay, all right. Thanks very much for that, Mitesh. Well, we flashed that story on basically the SEBI's thinking on derivative contracts. There's been lots of focus on weekly expiries. There was that talk of a consultation paper which is coming out. Yash has been, of course, getting to us how the thinking at SEBI is evolving. Yash, tell us more.
Well, Prashant, as you rightly pointed out, of course, the whole development around, whether to keep weekly expiry or whether to remove it and move towards longer-term expiry has been taking all the headlines. Now, one very important development that we've been able to pick up from our sources in market regulator SEBI is that any changes to weekly expiry, which is to the current mechanism of weekly contract expiry, will only be made if the data which SEBI is collecting shows heightened activity or involvement from retail investors. Importantly, what we've picked up from our sources is that the data which market regulator SEBI is collecting to study is between July 2024 to September 2025. That 1 year data, approximately a little over 1 year data, if it shows heightened activity from retail investors
only then SEBI might think of doing any changes to weekly expiry. Now, also along with that, what we've been given to understand, even if that data shows some bit of heightened activity from retail investors in the derivatives market, then SEBI might also think of first looking at various other measures. The intention here would be to let the retail activity cool off on its own, and only if that does not happen, that outcome is not achieved, then some changes could be made as far as the weekly expiry or a consultation paper there or the consultation process there is concerned. What are these other measures which could be considered before, making any changes to weekly expiry? One thing that we've been able to pick up from our sources is essentially taking the disincentives away when it comes to long-term contracts. 3-month, 2-month contracts, maybe making them more attractive and taking the current disincentives or the cost which they have, taking them away to sort of automatically let retailers flow into longer-term contracts without making any disruptions to the current mechanism of weekly expiries.
Thank you very much for that. Sudeep Bandyopadhyay is now joining in on this last leg of the show. Sudeep, you want to comment on what Yash was sharing with us?
Well, I think, there is definitely some amount of change which is on the cards. Both the government as well as the regulator and including the central bank. I think they are worried about the speculation which is happening in an unbridled manner through these short duration option contracts, which is leading to significant loss for the retail. They definitely want to do something about it. Now, if things can be done in a manner without disrupting the trade flow, that is, banning the short-term contracts and introducing only long-dated contracts, I think they will definitely try that, because obviously for the health of the market, volume is extremely important. And by removing the short-term option contracts, a significant amount of option volume probably will disappear. And that's not definitely in the long-term interest of the market. So they will try to marry these two ends and come up with an optimum solution. I think that's the effort, which is what I understand from what is being talked about.
Yeah, no, absolutely. And there certainly does seem to be a little bit of dilution, right, as you said, a rethink on whether, it should be a hammer approach. And it looks like it's not a hammer approach, as Yash said. They're going to try a lot of other things before they... basically the bar to do anything with regards to weekly options seems to be a lot higher as far as SEBI is concerned. Stocks, of course, moved up almost 2,500 rupees now. F&O stats, what's the data looking like? Nigel has walked across to the wall with exactly that. Nigel, tell us.
Well, the kind of setup that we have had, we mentioned earlier today, right, that the market could bounce off the low of the day, and that seems to have played out at least as of now, because we went to a low of around 25,152, and from there we did see a bit of a bounce. And if we just look at the trends, last week's low of around 25,000, and you look at the 20-day MA, it's around 25,050. Till this particular band is held out, you'll fancy your chances that, in fact, the markets could actually continue to be buy on dip and, could trend higher. Maybe some unfinished business at higher levels. Moving to the PCR, on Friday's trading session, it went all the way to around 1.35. Now, because the call writers have come back into play, and you have some put writing as well that's taking place, so the PCR has cooled down to around 1.2 or thereabouts. Just take a look at that. 25,300 call, massive open interest out there. 25,200 call as well, massive open interest out there. Put writing had become a little bit too easy, and now, in fact, the call writers are back in the game. A few stocks that we're looking at from the futures data. RBL Bank, the shorts in the system, they're not getting any kind of follow-through on the downside. The stock continues to remain in the band. But just take a look at it. On a day-to-day basis, it's been recovering from the day's low, and that's precisely what's happened even today. But there are some signs of fresh buying. L&T Finance, stock is up, holding strong with a gain of around 3%, and massive open interest built up on that name. And another financial that's doing pretty well is Federal Bank. Both these two normally don't come on the radar, but on both those two, we are seeing a good amount of buying. So a bit of a squeeze is what we're seeing in today's trading session. F&O data by the end of today will be interesting, but for the time being, the bulls have bounced back and they'll fancy their chances that the 25,000 odd level can hold out.
Thank you very much for that. One stock which has been under pressure since morning has been BLS International. This is after the MEA has barred the company from participating in certain tenders, Indian mission tenders, for a period of 2 years. So we had a chat with the management to understand the impact. And they said they're confident of resolving the issues soon, and there will not be any impact, at least on the existing business. Listen into what they had to say and the kind of clarification they provided.
There were some complaints in some other countries for procedural issues, etc. But we are working actively with the authorities to resolve this issue. I don't see any impact on our revenue, etc. We continue to maintain the growth momentum. Whatever discussions we had in the last few quarters, we continue to actively remain focused on that.
All right, get into a short break on that note. We'll come back with the closing levels. 10 minutes to go. The Nifty is holding on to 25,200 mark. It's just a bit of a downtick of 50 points.
Welcome back. Well, the market's down close to around 50 points, but the good news is the breadth of the market actually has improved quite a bit, because you have close to around 1,000 stocks now that are advancing. Sudeep Bandyopadhyay is with us. Sudeep, wanted your view on Tata Motors. That demerger effectively, takes shape from tomorrow onwards. Today is the last day. Last few minutes, if you want to play that demerger. Tomorrow's a record date. What's your view on the stock? It's corrected big time from the peak. It has had its share of troubles with regard to JLR, but at around the 650 odd mark for a combined entity. What's your view?
Well, Nigel, I'll wait and watch. I think there are still a lot of challenges which JLR faces. Leave aside the cyber attack in UK and what happened there. The demand scenario, both in China as well as in Europe, which are big markets for JLR, is a little unstable and uncertain at this stage. There are challenges as far as US is concerned. So at this stage, I'll be a little careful. India also, I'm not saying that there is a problem, but they are not in the leadership position in any of the segments which they operate. So I think there's a long way to go. If I have to play the four-wheeler or the automobiles pack, I think I will rather go to M&M or even Maruti for that matter.
Okay, all right. Sudeep, you may want to listen into this, story. This is the latest Vahan data with regards to auto sales numbers. Parikshit has looked at this. Parikshit, take it away.
Well, Bajaj Auto leading electric two-wheeler sales in October so far. TVS coming in second. We've seen Ather coming in at number 3 in October. They've been putting up a strong performance. Bajaj Auto has delivered over 11,418 electric two-wheelers to customers in the month of October. Now, this coming despite the shortage of rare earth magnets. We're also told that the company is expecting things to be normal at least till December. Yes, there are fresh restrictions which have been imposed by China, but almost all auto companies are evaluating the impact. But sources tell us that Bajaj Auto at least is well in control of things, at least till December, and they have a strong visibility of the rare earth supply chain at least till December, and after that they'll start working with their suppliers. Having said that, TVS was number 2 with 11,089 electric two-wheelers sold, and they had a 21% market share. Ather sold 9,805 units in October. They increased their market share by 1.4% to 18.8%. Hero sold 6,305 units in October. Their market share remained at the same level as September, as 12%. Ola Electric has seen their market share dip by 1.6% to 11.3%. They sold just about 5,859 units in the first few days of October. Let's see how things go, how the full month is, but it's quite clear that Bajaj Auto and TVS putting up a strong performance with regard to electric two-wheeler deliveries and sales, despite there being supply chain constraints of rare earth magnets.
Okay, all right. Thanks a lot for that, Parikshit. Well, time to wind out on the markets then for today. We go on with the cut-off around 45 to around 50 points, but par for the course, given that the global equity markets itself were in a bit of a tizzy. Adani Ports up 2%, good move out there. Bajaj Auto was up 1.5%, and Bajaj Finance as well, up close to around 1.5%. Interglobe Aviation, it's not cheap, but continues to hold on to gains. The stock is up close to around 1%. Tata Motors, tomorrow is the record date for the demerger. Today was the last day to effectively buy. So that one, in fact, was up closer on down 2.5% in trade. Tech, that struggled. Infosys, Wipro, both of them are under some pressure in today's trading session. From the broader markets, various stocks are doing a thing of their own. KFin, stock was up 6.5%. BSE, maybe the weekly expiry fears actually are going away now. Yash, our colleague, had put out that big story and the stock was up 4.5%. MCX as well, volumes have been very, very strong, so that one did well. So the stock, the market-related players and the exchanges did well. MCX, BSE, throw in then an Angel one as well that was up closer around 2% in today's trading session. What came in for profit taking? Cairns, that was down close to 3.5%. Syngene was down close to 3%. And Avenue Supermarts as well. Well, that one as well was down by close to around 3%. Not a cheap stock. And, that one, in fact, came out of the disappointing set of numbers. What else got hit today? BLS International Services. Stock was down. BLS E-Services as well was down. Negative news flow on BLS International Services. That's why that stock was lower in today's trading session. Tata Communications had a big, big run and optimism with regard to the data center play in Friday's trading session. Today it was down close to around 4.5% in trade today. So all in all, we go home with a cut of around 40-50 points odd, but the bulls will not be feeling too bruised today because of the breadth of the market was one stock declining for one stock advancing for two stocks declining, and we had close to around 1,000 stocks that ended in the green. On that note, we'll wrap up on this edition of Closing Bell. You stay with us. Markets Forward comes up next.